Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Snowman Logistics, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Mitra from ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, Margaret, and thanks to all the participants joining. Good afternoon. We have today with us the management of Snowman Logistics Limited to discuss Q4 FY22 results conference. Represented by Mr. Prem Kishan Dasgupta, Chairman, Mr. Ishan Gupta, Director, Mr. Samvit Gupta, Director, Mr. Sunil Nair, CEO and Whole-Time Director, Mr. A.M. Sundar, CFO and Company Secretary, and Mr. S. Kannan, VP Finance. So without further ado, I hand it over to the management of Snowman Logistics for their opening remark. Over to you.
Thank you, Abhijit. Good afternoon, ladies and gentlemen. Hope you all are keeping well and staying safe. And I hope you all had the chance to look at the financial statements and earnings presentation uploaded on the exchanges and our website. Overall, the company has done well in terms of revenue, the EBITDA, and also the expansion. This was in line with, the expansion was in line with our earlier announcement, where we have added 2 new big facilities, one in Coimbatore and one in Siliguri, which, though delayed, are now fully operational, and in the current financial year we will recognize the full revenue of these 2 facilities. In addition, we have added some dry facilities for the e-commerce business at various locations. We will give you all the details as we go towards the question and answer session. And feel free to ask any questions that you have. And with that, I pass it on back to the operator to please take up the questions one by one.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kaustubh Bubna from BMSPL Capital. Please go ahead.
Yeah, hi. So basically, I wanted to understand, why is this company's fixed asset turnover in general so low? So, even in FY21, if we saw on PP&E, which you guys reported of around 332 crores, you did sales of about 237 crores, And this trend has been there for the last 3-4 years as per the financials I see. And even this year, even though you all operationalized 2 new warehouses you did some expansion in Q4, you still at that same fixed asset turnover of around 0.6 to 0.7. So how do you make, ensure return on capital employed with such poor fixed asset turnovers? And what is your, how do you plan to rectify this issue going ahead and increase this?
Yeah, I'll take the question. Sundar here. See, our industry, this particular industry is definitely asset-heavy, capital-intensive, and fixed assets turnover of 1 or slightly more than that is the norm. basically because our core business is warehousing, and warehousing involves a huge capital expenditure. The way we are addressing, we also understand that this impacts the ROI in the long run. The way we are trying to address that is do a sort of balance it in a way that wherever we can buy land is cheap and easily available, we invest in the land. In other places, we try to go for a long lease. This is for the land part. Then again, coming to capex, warehousing normally involves around 60 to 70,000 rupees a pallet in capex. Here again, we have our current warehouses. Most of that we have built it with our own investment. But going forward, we are again looking at a mix and match here. Wherever possible, we are going in for an asset-light model where the landowner does a build-to-suit. He builds warehouses for us. This is on the warehousing front. Transportation, we are completely moving towards an asset-light model. If you see progressively our fleet size has been coming down, and in a matter of couple of years, we may bring it to almost zero, and then only go with market vehicles. So with this sort of a model, we don't see any problem going forward reaching a ROI of anywhere 15% upwards, steady state.
Thank you. We seem to have lost his line, so while we wait for him to join back the queue, I would like to remind all of our participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, how much is the new capacity addition in terms of pellet from Coimbatore and Pune facility?
Hi, both put together we are adding 8,200 pallets. In addition to that, we have also expanded in existing setups wherever we had land. So in last 12 months, we have added another 3,000 pallet positions.
Okay. And sir, are we planning any further capex in FY23?
Yeah, so we have purchased a land parcel in Kolkata where we can build around 9,000 pallet positions in 2 phases. And we are at the stage of seeking building plan approvals. At the same time, we are also going for e-commerce facilities which are asset-light model. We will go for one such facility in north and one such facility in west and one in south. At the same time, one e-commerce facility is under construction in Gujarat, which should be operational in this month.
Okay, so how much would be the total capex for FY23?
FY23, we are looking at anywhere between 70 to 80 crores.
Okay. And sir, a broader question on the how do you see the demand outlook for the FY23 going forward, and the possibility or margin improving to 30% level, how do you see that going forward?
So see, we are looking at more on absolute terms when it comes to margin rather than percentage, because as you know, we had launched our technology platform for transport aggregation. So that has given us a 35% growth in transportation. We expect the similar growth in the coming year as well. So the contribution from transportation will be increasing in the overall revenue, which has a lesser percentage of margin, but it is zero asset model. So overall percentage in terms of the overall margin may not grow, but in terms of absolute, the number should grow. When it comes to warehousing business, yes, there definitely we are seeking a lot of initiatives where the major one being the price corrections with the customers, and we have been fairly successful this year in terms of commanding some price increase. So and the other value-added services that we are offering to customers. So that is something which should contribute a better margin when it comes to the only warehousing businesses. But with the mix of the typical warehouse that we have been offering, shared warehouses versus the e-commerce warehouse where it is asset-light model, what matters to us is not the percentage of margin, but in absolute terms how much we are growing, and the focus is in that direction.
Okay, sir. Thank you very much. That's it from my side.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. I hope I'm audible. 2 questions from my side. On a YOY basis, the growth in warehousing services that we see in your segmental reporting, how much on a percentage terms would be driven by volumes and how much would be driven by yield, if you can break it up. And also the incremental top line growth vis-a-vis the incremental EBITDA growth, it seems to be accruing at 10% or less than 10% EBITDA margins. So this is entirely applicable for transportation services. Just wanted to have clarity on these 2 issues. Thanks.
So, our warehousing business grew by 13% year on year, whereas transportation has grown by 33% when it comes to revenue. The blended is 21% increase in our top line. In case of EBITDA, our warehousing EBITDA has grown by 6% and transportation EBITDA has grown by 110%. Blended is 8%. So and then we have agency business which is a small amount. So ignoring that, so overall we have an 8% increase in the EBITDA and 21% increase in the revenue. We have also written off our QIP expenses in this quarter, because of which it is 8%. Otherwise, it could have been around 10.5%. So this is the ratio, and we believe that the yield that is coming from the warehousing, which is typically 30. Where is the warehousing EBITDA? Warehousing EBITDA, which is typically 40%, anywhere between 38 to 40%. We will continue to maintain that, and the future growth, we are already operating at around 85% utilization today, including the 2 new warehouses which we have added. Without that, we should be somewhere around 89%. So we believe that a couple of percentages more can come from utilization or volume, as we say, and around 3 to 4% is what we are expecting from the price improvement.
And how would you break that 13% up for this particular year between yield and volumes? The warehousing growth number of 13% for FY22, how would you break it up between yield and volumes?
That is typically 10-11% with volume and 2% to 3% with pricing. So last year, because of the wave 2, we could not command much. But this year, in last 3 months itself, we could have a lot of corrections done. So this year, we are expecting anywhere around 4 to 5% price correction.
Okay, great. And in terms of your volume guidance, it stays the same. It is essentially 2 lakh pellets over the next 3 years.
Yes. So the strategy remains same. We are also looking at the increasing cement and steel prices, and that is where we are going a little asset-light model wherever possible. So on a longer run, in a 3 years time horizon, yes, 2 lakh pallet positions are still something we are looking at.
Right, got it. Thanks. I'll come back in the queue.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Abhishek Nigam from B&K Securities. Please go ahead.
Yeah, hi. Thank you everyone for the opportunity. Just a couple of questions on the new facilities. How has the utilization been till now and the outlook for FY23?
In case of Siliguri, we are at around 35% utilization today, and we expect that by around September we should be 80-85% utilized, and then onwards it will be 85 upwards only. In case of Coimbatore, we are at 50-55% utilization now, and we hope to be there around 85-90% by September. So by September we expect both the facilities to be benchmarked with the national average today, which is 85-90%.
Okay, that's very useful. And I was just going through the profit and loss statement. Finance costs have been rising a fair bit. Any plan to sort of proactively bring down debt? Anything that management is looking at?
No, actually, finance cost hasn't in absolute. It has not gone up. What has happened is earlier the finance costs were being capitalized. Last year it was capitalized because there were projects capital work in progress. Whereas current year everything has been capitalized, and hence we get the full charge of the interest cost. And there is no immediate plans to reduce the debt. In fact, we will be taking a little more debt to fund our Calcutta project. And in spite of that, even with that, we are definitely very lowly geared.
Okay, fair enough. So it's impacted by the startup of the new units at Coimbatore and Siliguri again.
Yeah.
Okay, fair enough. And sir, Q1Q, it has. If I look at the employee expenses, they have gone up by almost 11%. Is that because of some fourth quarter bonus numbers, or something else has gone in there?
Sorry, come again. We could not hear you properly. Hello.
Pardon?
Mr. Nigam, can you please repeat your question?
Sure. So if I look at your employee expenses, they were around, I think, 62 crores in third quarter, and it's up to almost 70 crores in the fourth quarter. So that increase is mainly because of fourth quarter, there are some bonus numbers, or is it something else?
No. Fourth quarter, one is the new warehouses were operational, so definitely the headcount has gone up. That was mainly because
that's the main reason, yeah.
Okay, fair enough. Thank you so much. I'll come back in the queue.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Kaustav Bubna from BMSPL Capital. Please go ahead. The next question is from the line of Kaustav Bubna from BMSPL Capital. Please go ahead. Bubna, please unmute yourself from your cell phone and ask your question. We have unmuted your line from here. Please unmute yourself and ask your question. Due to no response, we'll move to the next question, which is from the line of Abhishek Nigam from B&K Securities. Please go ahead.
Yeah, sir, I don't know if I missed this bit, but on the Kolkata project, if you could give some details in terms of, the size, how much capex and timelines, that would be very useful.
So Calcutta land that we have purchased can have 9,000 pallet positions, We plan to build it in 2 phases of 5,000 and 4,000 pallet positions. The land development work is going on. We are seeking permissions for the construction, which takes a couple of months from now. At the same time, we are also keeping watch on the steel and cement prices. So depending on all possibilities, we may start construction in next 3 to 4 months time, and it will take 8-9 months for us to construct the phase 1. At the stage we are at. This will require, with the current steel and cement prices, somewhere around 40 to 45 crores of investment. Phase 1. For the phase 1.
Okay. So in terms of timeline, it could be, say, broadly about 1 year or so.
Yes.
That's useful. Thank you so much. I'll come back to the queue.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Anand V from BMSPL Capital. Please go ahead.
Since you are starting a CapEx cycle, what is your free cash flow guidance?
So,
Anand V, we cannot hear you. Please unmute yourself and ask your question.
Hello.
Sir, can you please speak a bit louder or come closer to the phone?
Yeah. Could you, are you able to hear me now?
Yeah.
Yes, sir.
Yeah. Since you are starting a CapEx cycle, what is your free cash flow guidance for the next 2-3 years?
One second.
See, we should be generating around 50 crores of free cash flow every year.
Okay. Thanks.
Any other question, Anand?
No, thanks.
Thank you. The next question is from the line of Bhaskar Chaudhary from Entrust. Please go ahead. Bhaskar Chaudhary from Entrust, your line has been unmuted. Please go ahead with your question.
Hello?
Yes, so we can hear you.
Yeah, sorry. So I wanted to check what's a good standardized kind of PAT margin for this business? Because I mean, at the PAT level, nothing really flows through, although you're still generating FCF, and capex is being done now for the next 2-3 years, so depreciation costs will probably increase. So how should one view the PAT number on a standardized basis?
Currently, what is happening is we have a deferred tax asset of around 40 crores sitting in our books, and since that is being written off over the years, that is muting the PAT. Otherwise, I think 2 years down the line, we should be having a double-digit PAT. Around 10% of PAT should be possible 2 years from now.
Okay, but even at the PBT level, sir, it's 4 crores, on a top line base of 290 crores. So, I mean, is it really the deferred tax asset that is creating the issue?
Yeah, at PBT level, it's basically the deferred tax asset which is muting the numbers.
No.
But
He's asking after that. So the basic. Sorry.
Sorry, Sunil, I'll just make a point that depreciation is quite high. That's what's putting the number down. So it's about 50 crores of depreciation per year. The deferred tax asset is just between the PBT and PAT levels, so that will continue over the next 3-4 years probably. But we are looking at a PAT of double digits, as Sundar was saying, within the next 2 years, and it will only improve from here.
Okay. And post the capex that you have planned, I mean, what is the internal projection on the depreciation line, maybe up to 2 or 3 years? I mean, how should one look at that number going up?
It'll stay a similar number because the old facilities that we had made, that depreciation amount will reduce, whereas these new facility depreciation amount will increase. So 50 crores of depreciation per year is something that's standard for us.
Okay, understood. Thanks.
Also, in case of, I'd just like to add, in case of your first question, because of the Ind-AS accounting treatment for the leased lands, we end up overcharging depreciation and interest in the initial years, which also goes and impacts the PBT as of now. But maybe in few years down the line, it will start benefiting us since we have overcharged in the beginning years.
Understand, sir. Understand. I'll reach out separately and, maybe do a deeper dive with you. Thanks.
Thank you. The next question is from the line of Abhishek Nigam from B&K Securities. Please go ahead.
Yeah. So I was just looking at, the presentation, and QSR is a pretty big category overall for you. And I assume the decline in the fourth quarter is because of a bit of COVID that we saw in January. I just wanted to check how is that segment doing now in the first quarter, and overall, what do you expect for FY23, considering it's still trending below FY21 levels?
Sorry, there is no decline in QSR. Which slide are you referring to?
Yeah. So if I look at slide number 9. So, Q3 FY22, the number was 152, and that comes down to 129 in the fourth quarter.
What is that? Final only 152.
This page 8 probably in the presentation.
Page number 8 you're saying, right?
Where it says industry-wise revenue?
Yes, industry-wise revenue, page number 8, QSR, Q4 is 172 versus last year Q4 116. So there is a 48% increase in the overall revenue from QSR.
Oh, okay. I think I have the wrong presentation in that case. Okay. Maybe. Okay. No worries, I understand. How is it doing in the first quarter?
Yeah, first quarter, so far you are saying, you mean in April?
Yeah, so far in the first 20-25 days of April.
It's good. April and May are again season for them. June onwards it starts slightly coming down as schools open and the vacation is over. But season wise, they are doing good as compared to last year performance.
Okay.
Thank you.
Thank you.
Thank you. The next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. Just to sort of take the thread forward from one of the previous questions, I think you guided that the Calcutta 9,000 pellets will incur an investment of 40 to 45 crores. So, increasing to 2 lakh pellets will incur how much investment? So is it multiple of this, or how to look at it?
No, 9,000 pallets won't cost. We said we are going to put up 9,000 pallets in Calcutta in 2 phases. The first phase is going to be around 4,250 pallets, which is going to for first phase would cost us around 45 crores.
Okay.
So 5,000 pallets, yeah. So only for 5,000 pallets we said 45 crores.
Yeah.
When it comes to 2 lakh pallet position, as I told you, we are also looking at asset light model. So if you ask us today, we are not doing that multiplication of how much will it require, because we have some good leads on asset light model as well. So today we are only looking at 1 year at a time, and as we progress on our asset light model, and we will have to calculate how much capacity can come from that model, and then rest is what we need to invest.
Okay. But in general, these pellets, when you sort of guide for these pellets, you're also including the volumes that you are handling, in some conversion form for the e-commerce facilities on the back end, or the e-commerce facilities that you are managing, say for Amazon. Are you including those things and sort of converting and giving that guidance, or how is that guidance sort of?
So we have a business model called Snow Preserve, which is a warehouse setup, which is palletized and which is shared by multiple customers. This is where we calculate capacity on a pallet basis. Our unit of charge to customer also is on pallet basis. So whenever we talk about pallet, this is typical shared warehouses under Snow Preserve service offering. The other offering is Snow Serve, where we do dedicated warehouses for e-commerce customers, or at least dedicated earmarked compartments within a warehouse. And that's where it is completely on a square foot basis, which is asset-like model. We lease a dry warehouse on square foot basis. We invest in terms of setting up the internal equipment, and then we start serving customers. Here the measure is square foot basis, and today we have 6 facilities totaling to 1.4 lakh square foot.
So just to sum up, we're not converting any of the facilities into number of pallets of these types. So the 200,000 pallets is independent of these Amazon type facilities.
Yes.
Right. Got it. But in terms of preference or priority, is the priority shifting towards this kind of, back-end warehouse solutions for e-commerce players instead of, putting out direct capex for pellets? Is that the thought, or because I keep on hearing being asset light, so?
It'll be a mix of both. We'll have expansion on the cold storage front where we build our own facilities also. And we'll continue expanding this other vertical of dedicated warehouses also.
Okay. But the annual capex run rate, the 70 to 80 crores, is a decent enough annual capex run rate to expect in the medium term, as in not only 23 but maybe 24 also.
Yes.
Okay. Got it. Thank you. That's all from me.
Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. 2 questions. First question is related to Snowlink. So we know that it is, Snowlink on its own is profitable, but then the issue is related to the transportation cost. And now with the shift from the regular warehousing to transportation, don't you think that the fuel cost will be an issue to you?
So since Snowlink is a platform which is typically a back-to-back arrangement, the risk is shared here, and most of our new agreements with the customers have clear fuel clause with them. And unlike a cost plus model, this is a minus model. Okay, so typically what is the price that customer is giving minus our margin is the price that we offer our partners.
Okay. So the reset of the prices will happen on quarterly basis or half yearly?
So in case of dedicated model, it is quarterly pricing, and 75% of our revenue today under Snowlink is on a trip basis. So it is for every trip. There is a bidding process that happens on our platform, Snowlink platform, for every trip.
Okay. Second question is related to Snow Serve and Frazo. If you can take us through the business model or revenue generation as to how will you go about with this?
So Snow Serve is an e-commerce solution for us as of now, wherein we lease a dry warehouse, convert it into a e-commerce backend platform in terms of freezer, chiller, packing, sorting, grading lines, and the IT solutions that whatever the customer wants. And Frazo and Amazon are the 2 customers who are being served under this platform today.
Okay, but then how is the revenue sharing or the revenue generation in this system for Azure then?
The revenue is close to 5% as of now, the revenue contribution. The last year we did, where is the last year number? We did 13 crores revenue from this.
Okay.
And that means, sorry, this year, this FY22, we did 13 crores of revenue from SnowServe vertical, and we expect it to grow by around 25 to 30% in FY23.
Okay. Any increase in the average selling prices that you've seen during the year?
The average selling prices, as I told earlier, we are expecting anywhere between 4 to 5% this year.
Okay. If I can just go in the balance sheet, there is a statement which is saying contract assets of 36 lakhs. What are these related to?
Oh, these are the trips where we have still not got the confirmations on completion.
Okay.
These are in-transit transportation trips.
Okay, sir. Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, I have one more question. I just checked the total pellets that you have handled for the year. So that's almost 1.36 million. Is that the round of 1,17,000 static capacity that you have by the year end? Is that the way to look at it?
Yes.
So that's
those many pallet positions we have built, pallet months we have built.
No, sorry. What was your last statement? I missed it.
Build capacity over the year. So 1,17,000 into 12. It needn't be completely 1,17,000. Some months, some locations could be less billing. Some locations could be more than 100% billing. So overall, the total pallets built would be what we are talking about.
Okay, so that many turns of the static capacity, the average static capacity for the year.
Yes.
And essentially that has grown by 10% on a YOY basis. That's the way to look at it, right? I mean, when you said that your volume growth in pellets is 10%, this 1 lakh or 1.36 million, that has grown by 10% on a YOY basis.
Yes.
Okay, got it. Thanks. That's all from me.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. Anyone who would like to ask a question, you may press star and 1.
Why do you force them?
A reminder to all the participants, if you wish to ask a question, please press star and 1. The next question is a follow-up from the line of Rohit Ohri from Progressive Shares. Please go ahead.
So would you like to share any guidance for the next 2 years in terms of the top line, or are we okay with the growth of 20-21% on the top line and around 25-26% at the EBITDA margin level?
As we have set up these 2 new facilities where the utilization is still to reach our benchmark of 85% plus, and also the e-commerce facilities are set up recently in Pune and Mumbai, and the Ahmedabad one will be operational this month end. We look forward for a similar growth. We would not like to put a number to it as of now, as we are still finalizing few other strategic items.
Okay, but then these capacities will be on board by September, so there should be a slightly higher uptick, right, in terms of the numbers as to what is around 20-21%.
As I said, since we are still finalizing few things, we would not like to put a number to it.
Okay.
But our objective is to definitely do better, have better run rate than what we have done this year.
Okay, that helps, sir. Thanks a lot.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you, ladies and gentlemen. The management is available if you still have any questions, and they will be happy to answer you. Thank you for your participation.
Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your